Well, you ask about the definition of a recession. I've got the textbook definition right here, at least as most people understand it. They say it's 2 consecutive quarters of negative growth in U.S. production that's measured in real GDP.
Is the White House trying to change the common definition of a recession because next Thursday the GDP numbers coming out are going to show that we've been in a recession?
So let me say this, the strength of our labor market along with the other economic factors is what we generally see in a recession, or even what is not what we generally see in a recession or even a pre-recession, because we're seeing the strength of the economy and the labor market. So that's really important to note there, because those are key elements as we talk about that, as folks keep asking us about that. So Americans across the country are back to work at a historic level. 21 states, the most in history, have unemployment rates at or below 3%. That is an important number to know. 14 states are now at their lowest unemployment rates since this series began in 1976. And last month, the unemployment rate was a new low in 8 states. So again, the strength of our labor market, along with the economic indicators, is not what we generally see as we talk about a recession or even pre-recession.
It's just going to be one of these recession sauces, the temperature of which symbolizes the depth of the recession, the size of the dip, if you will. And if you get the wrong sauce, well, it could cost you some money. So, as I recover from what turned out to be a little hotter sauce than I thought, let's run through each variety and what you do with them, starting with the one that doesn't give you a stroke, the mild. Now, for the past 8 days, this market's been trading like we're headed for a mild recession. Why? Because of the banks. Instead of Tostitos, I should be calling this Wells Fargo.
It's the Business Cycle Dating Committee of the National Bureau of Economic Research, a nonprofit independent research organization. And as one CNN reporter recently put it, it's 8 white economists you've never heard of, injecting a little bit of critical race theory into macroeconomics.
If Wall Street starts assuming we're headed for a spicier recession, not just a mild downturn, then you're going to have to pull in your horns a bit. In the spicy scenario, you can buy the higher yielding stocks as interest rates will start to trend down, reducing the bond market competition.
That's what I would say. We've always talked about the strength of our economy. We've always talked about how historic it's been, and we've always talked about the transition, right? The transitioning to more stable and steady growth. And so to your point about the job growth there, this is what we have been kind of stating for the past several months. Look, the economy created 1.1 million jobs in the second quarter. And around 300.
Finally, now what happens if we're headed for an ultra hot recession? Meaning a real picante. One that burns you not once, but twice. Hoo-ha! In that case, you have to buy the ultimate defensive plays. Now, we own a bunch of these. Oh, they're doing so badly today because it's such a good day for the Travel Trust, because I don't want to take any of these possibilities off the table. They're all within the realm of what you can buy. We know the Fed's going to raise interest rates by 75 basis points next week, and they might do it again in September after they have their August break. But, hey, wouldn't you love me to have 2 months off? Can't beat that job.
5 jobs per month. Those are historic numbers. Those are, if you think about the 1.1 million jobs, we are back to where we were at pre-pandemic levels. So that is what we see as strength of the economy. Again, we're going to transition into more stable and steady growth. And so we're going to continue the work that the president has set out to do to make sure that we continue to deliver for the American people when it comes to the economy.
We got moderate. Oh, yeah, that's medium. And we got severe. These are the choices, okay? This is it. No more. It's like, oh, it's going to be serious. It's going to be a doozy. We gave you the whole Tostitos thing. Can we avoid a recession altogether? There's always the chance for no sauce at all, in which case a diversified portfolio definitely won't hurt you. But that's really beyond the Fed's control. To avoid a recession entirely, you need the war in Ukraine to end, and you need the Chinese economy to fully come back online. You also need the dollar to come down. Don't hold your breath, especially if you have the cayenne sauce in your mouth. Bottom line, it's the recession, stupid. Right now, it's just the temperature that matters.